Does rising rates mean a housing correction is on the way? We've seen several different articles this week, including the inflation numbers are not getting any better. They've actually slightly picked up, even though we've made so many different interest rate increases. We also see the figures that the Fed is likely going to be increasing by another 75 or even 100 basis points this upcoming week. We also see all these different experts saying that there's a price correction. So what is the truth? What is likely to happen right now, given where we are at with the market? And so does it make sense of what is happening? What we do know is this: interest rates are higher than before, and different markets are getting impacted in their own ways. Let's take a look at some of the data so that you can make an informed decision as to what is the best move for yourself in this situation. When you take a look at this, so every market is impacting a different experience. So let's take a look at the median sales price of what homes are selling for versus what they are before. As you can see, in general, for the entire country, we've only seen a 6% year-over-year increase. This is a far drop from what it was just a couple of months ago. As you can see, back then the median price was $394,000, and now the median price is $370,000. That's a $24,000 decline, which is equivalent to about 7% or roughly around that. Now, every metro is having its own impact. So for example, if you look at the Tampa Bay market, which is the hottest market in the country, you can see they are still at 19% year over year. And while they had a decline, it's been a very small decline. And this is for several different reasons. Combination of there's a lot of investors interested in this market, especially hedge funds. And so they continue to be a very big player and a big flooring for a market like this. So that always gets impacted in its own way. Places like Tampa, Nashville, Miami, really, really strong markets, even with the increases, which is pretty wild if you were to think about it. The affordability is down by about 16, 17% when it comes to your monthly expenditures, but they still aren't really that affected. But let's take a look at what's been going on in the Bay Area. So the Bay Area, given we're much more heavily tied to the tech industry, which has had a bigger impact than most of the country, are seeing these drastic changes. And this is happening in the Bay Area, this is happening in Seattle, this is happening in Austin. Make no mistake, all those markets that are more affiliated with tech, that had a nice increase because of it, are impacted the same way. So you can see we are year over year now only at 1% higher, which isn't very much. You can see the declines have been from 90% year over year to about 1% year over year now. And that's a decline of about 14%. So this is some of the highest declines in the entire country. And so there is some good news out of that. Now, you may be asking yourself, well, Spencer, I bought a home a couple of months ago, and did I make a mistake? The truth is, if you look at the numbers, let's take a look at this. If you bought it 4 or 5 months ago, as I did, let's say you were looking at $1 million home, you put 20% down, and you had an interest rate, let's say 4%. You can see your total monthly amount, including property taxes, $49.44. Now, the market has declined roughly about 15% plus or minus. So if we did that same math, that same home that's worth now $850,000, their down payment is less to put in. That's also because, quite frankly, their other assets are likely down more than it is in real estate. And interest rates are about 6%. You can see actually your monthly amount is still higher. And this plays a very important factor in terms of what would people do when it comes to like options down the road. Because let's take a look at this number too. When we look at the Redfin data and we look at, let's say, new listings, you can see new listings are down across the country. And why is that? With higher interest rates, what happens is that the number of people wanting to sell is also significantly less because they locked in a lower rate. Like my rate is now at the 4%, so it's going to be harder for me to make a move. Price have to decline pretty significantly ahead of interest rates for me to make the decision. But from an absolute price perspective, it has greatly been impacted. Let's take a look at San Jose numbers, right? Because San Jose is a huge metro. You can say same thing. Year over year, listings are down even more than the country, 27% drop, right? So that's something very, very material that people have to understand and be okay with. But what has this also done related to homes being sold? The volume is also down significantly, right? So you can see year over year, number of houses sold. If we look at the most recent one, which actually has been an uptick, is 33% less homes being sold. And so what does this mean if you are a buyer? At the end of the day, you want to have a time horizon. It's all relative to your time horizon. If you're planning to be in the area for a couple of years, you can see rent has continued to increase. You can see there's a lot less competition, which is beneficial. And you can use options with lower down choices because sellers also have less to choose from. So in my opinion, as you can see, the affordability or the monthly amount has already adjusted in the Bay Area, which is way better than all those other markets, which are actually even more unaffordable now than before. So at least the Bay Area has already adjusted price-wise. So you can see it's really the same kind of monthly spend that you would do otherwise. The difference is that you're actually having less competition in the market. So you'll be able to potentially find some more options and have less bidders go against you, which in my opinion is a great situation to be in if you are a buyer. This is also something to be mindful of. This is not like a stock market, right? You can't just buy a Google share, sell a Microsoft share, and just be very liquid. Just because the average prices drop in an area doesn't even mean you're going to be able to find all sorts of different options, because you have your own preference of the specific type of home and in the specific neighborhood potentially. And so with all those different things combined, it certainly is very important to have the understanding. You have a long-term view, you want to get into the home. There's all these good and bad articles all the time. It's extremely confusing. I totally understand that. But if your goal is at least for a couple of years, actively look. If you find the home that makes sense for you, we will do what we can to get you into that home so that you can move on. Now, if you're a seller on the reverse, it's a very tricky situation, right? The question is, what is your motivation to move? You can see a lot of people are saying, look, I can't cash in for the record high anymore, so I don't want to do that. My new rate is going to be a lot higher. So where would I go? There are many other options across the country. You can move for lower tax states, lower tax areas. That's still something that's continuing to happen. So if your plan is to want to move over the next 1 or 2 years, it's hard to argue now this is not a good time for you to be able to do so if that is the reasoning. If your reasoning is trying to recoup back to those highs, I don't think you're going to be able to recoup that for at least a couple of years, to be conservative. So it is dependent on your goals and what your time horizon is. As you can see, with all these short-term effects, they're absolutely going to be very confusing in the short term. But over the long term, if that is your goal, to be able to be in the area and stop paying rent, there is still a lot of opportunities. And as you can see, while rates have increased, I don't think housing will crash. But fortunately, in the Bay Area, housing has already been impacted to adjust accordingly. Imagine if you're in the Tampa Bay market, the decline was only 3%, but in reality, your unaffordability is up 15%. It's got 15% worse. So there's actually much less balance in those markets versus the areas that we are in. Hope that was helpful. If you like this video, of course, be sure to like it, share it, subscribe to the channel, and I'll see you in the next one. Bye now.